Mo fẹ́ ṣe nǹkan kan. Mo fẹ́ ṣe láàárọ̀. Mo fẹ́ supply lateral. Àwọn ọkọ̀ tí mo wá fẹ́ lò.
Hello, good morning. Can we hear me? Hello, good morning, everyone. So if you can hear me, can we please just type yes in the chat box together? Can we hear me loud and clear? All right, good morning, sir. Okay, so we can hear me. So let's go on to check what we have for today. Good morning, everyone, where we are joining from. So we are going to look at opportunities on the chart where we can position to take trades from. My name is Jeremiah. I'm hosting our MMR for this morning. All right, so before we go to the chart, there are two important things we need to do. First, we need to check Forex Factory. And secondly, I'm supposed to share a little bit of the lens through which I'm analyzing the chart from, as it helps gives a clear perspective about what to actually expect or see on the chart before we pick trades. All right. So first off, let us go to forexfactory.com. Go to forexfactory.com to enter and check what we have on Forex Factory for today. For today, I'm just going to remove and filter the set of news that we're not to bother ourselves with. So today we have very high impact news coming out for Canadian dollar alone. That's 1:30 p.m. Nigerian time. All right. So Canadian dollar, we're expecting a high impact news. Then outside the Forex Factory, also need to pay attention to the negotiations surrounding the war in Russia Ukraine being handled by the US president. Right. So that also can impact the market at any time. But for today, according to Forex Factory, is the planned website, you only have this for you, right? So next now, I should also share with us some very simple concepts that I use to analyze the chart so as to get opportunities from there. What are some simple charts? What are some simple setups that I look out for? Because you're supposed to have a plan before you go to the chart at all. It's not when you get to the chart, you now start looking for what to trade. No, you should already have a plan in motion that will guide you on what you should see before you will now pick trades, right? So, a very simple context. Um, Anytime we are looking at the chart, we want to buy. And why should you buy? So first you can decide, or I do decide to, one, I can buy at horizontal support. One of the major reasons why I can decide to enter the buy. horizontal support, or 2, I can buy in an uptrend, after pull back, that's simple. Then 3, I can buy after the breakout and retest of a resistance. Simple. These are just simple things to look out for that can position me for a buy. Okay. About that, need to press on again. So I said I can buy at support, buy after a pullback in an uptrend, and then buy after the breakout and retest resistance. And the feed will now be that for sell. Right? So now go to the chart to see where some of these things play out, so that I can use them to pick trades. Right? So I'll open my MT5. So you can start from the currency and then we'll move down to the indices and take requests as much as possible. So, of course, the major currencies to look out for are the ones that are paired with the US dollar. Also paired with the US dollar, they're fantastic to go with. But to quickly show us some immediate opportunities on the chart. For example, I'm presently on the chart of EuroCAD. Let's have in mind that later this afternoon, there are going to be news for CAD. At the moment now, you can see very fantastic uptrend leading up already. So this is higher high, higher low, and this is higher high. Now we have clear higher low. Right? So according to one of the rules of buying, like I stated, buy in an uptrend after a pullback. This chart has already pulled back to discounted area. So when the market is moving in an uptrend, let's say in this manner, the pullback is what gives the discount. So if it's yet to form a pullback here and then you jump on a buy immediately, you are not buying at a more defined or refined area, as this buy is too early. Once you wait for a type of pullback, then you are buying at a discounted area. So the bottom 50% of the move discount area. Any area from here on the chart can easily buy and then put your risk management tool in place. The SL will be above the previous, higher low, and then you take profits just be above. So you can target a 1, which you want, should do as you deem it fit. So that applies to the chart of EuroCAD currently. Currently applies to the chart of EuroCAD. All right. So EuroCAD, you can see a very fantastic opportunity to buy at the moment, to buy around here, this point in time, and then easily use this level here as our stops, then the top here as our TP. So if if the trade hasn't hit our TP before 1:30 when the news will come out, and make it, right? So Euro card, that's first buy opportunity there because it's in line with our plan. And secondly, we have the Euro Australian dollar, we have Euro AUD. So Euro AUD as well. It's a clear uptrend. Get it? And presently now is dancing around a resistance. Now, remember another reason to enter a buy is when we can see breakout retest later today, later this week. Just need to break out something like this. We need to see something like this chart, then we breakout and retest resistance. Then we can enter our buy from this area, position for buy here, then target areas like this as stop loss, then areas like this and take profit. And target as high as this level or take profit. So people with a lot of risk appetite can simply use the other approach now is to simply just use a buy stop above this resistance target. So those are the two that I'm seeing instant opportunities on the currency chart. Now, let us now move to the indices, sorry, the other major currency pairs chart. So I'll start from the Euro USD. What do we have on Euro USD? So Euro USD index has been consolidating for a long while now, for some days now. That's why we are seeing the Euro USD pair consolidating for some days now. So everything the Euro USD has been doing for a few days now has just been pure consolidation. We've been dancing around inside of this box here. So the direction right now isn't an uptrend or a downtrend, just pure consolidation. And what are the best ways to trade in consolidation? So once I have marked out my consolidation, it's just my consolidation area. One of the easiest way to trade a consolidation is buy at the bottom and sell at the top. While once it is in between the consolidation, I'll be selling at this level, selling around here. It's as simple as that. Then my stop loss will be above here. Then my take profit will be just the middle of the consolidation. That's how best to trade a consolidation. Then for a buy, if you're buying consolidation, just buy at the bottom. So buy limit be down here. And stop loss will be around here at the middle. So for a consolidating market like Euro USD to trade in between the box, just sell at the top, buy at the bottom. And when it eventually breaks out of this consolidation, whichever way, above or below, you simply wait for a retest and then we follow the trend. Then it has given you a trend. Now, they're just consolidating for now. So it's a wide range consolidation. A bit how to trade wide range consolidation, right? So the probability that whatever is happening on Euro USD should happen on British Pounds USD is also very high. Just that British Pounds USD is showing a more of a downtrend setup. Let's look at it from the higher time frame. It's wise to do top-down analysis. So higher time frame, daily time frame of British Pounds USD, been seeing an uptrend for a while. However, price has now decided to take out, there's a criteria to know if an uptrend becomes downtrend. So for emphasis sake, anytime you see the price moving in an uptrend like this, the higher highs, the higher lows, then it's giving us another higher high, then another higher low. Note the most important part of the uptrend is the higher low. The higher low is the most important part of the uptrend. So as long as it's creating higher lows, the market is most likely going to continue up. Immediately price takes out a higher low. That's one of the early signs of change in trend. So see, according to this my diagram here, the market is not supposed to take out this higher low. So this chart, this move rather, is not supposed to go below the previous higher low. So here, the pullback is supposed to end so that the uptrend will continue. Once it goes below the previous higher low, it is now supposed to give us pullback either to this level or to this level, as long as it's not going above this previous, this now new lower high, then that's a very concrete sign to know that the trend has changed. So if we're going to apply this to the current chart, this area was the last higher low. See, this area here was the last higher low that created this. That is the area price is not supposed to go below from. Now, for some reason, price has gone below that higher low. Now it has changed to giving us a pullback to further confirm that this trend is going to go down. It is not supposed to pass this new lower high. See it? This new lower high. So it is not supposed to pass that new lower high. By virtue of that, can now begin to position for the sell setup. So let's scale down to people that are very much involved in swing trading. You entered a sell from this area, then the stop loss will just be above here. Then they will target this level and take profits. That's for swing trading. Now, for day traders, we that want to look for short opportunities within the day, see how we can take from it, scale down to 1 hour time frame. So when we see the build up, so one of the reasons to sell, like I did for the buy, the reasons to sell can also be the same as that of the buy. We just need to flip it. For example, you decide to sell. Let me just quickly write that out for us. Sell at horizontal resistance. That's a very good reason to sell. Then you can also decide to sell in a downtrend after a pullback. Also decide to sell in a downtrend after pullback back to the premium area. After a pullback, there is at least 50% pullback. Or the third one is you can sell after the break and retest of the. It's as simple as that. So you can also decide to sell after the breakout and retest of a support. So these are some basic price action reasons to sell. Now, which of this applies to this? So for short-term trade, we trade what we see immediately. Because it's a daily trade or a scalping trade, we need to focus on what we can see at the moment and trade in line with that. Simple as that. You trade what you see, not what you think. Plan your trade, you trade your plan, and then you trade what you see, not what you think. Because the market is always right. The market is always right. So if we're going to trade what we see, we can clearly see a downtrend. How do we know? Downtrend normally starts from resistance. That's a resistance level there. And then we can now see what builds up downtrend, which is lower low, then lower high, and then lower low, then this is considered a lower high. How do we know it's no longer a lower high? Trend has changed. It's only when it goes above lower low that's when the trend has changed. For a day trader, I'll be trading what I see. So what it is doing currently now is a pullback. Now there are like three ways to enter a downtrend back in a more elaborated way according to price action. But I'm going to just streamline it to simple setups that we can see. So for starters, anyone entering an instant execution sell now, you're not wrong. You just need to consider this level as your stop loss. The stop loss will just be above this previous lower high. This is the area where you put it. As simple as that. If you are considering an instant execution now, that's where you put it. Now, if you are considering entering at a more premium area, because you should sell at premium and then buy at discount. So the premium area would be all of this move. When you look at this lower high to this lower low, where is half of it? Half of it somewhere around here. For those of us who know how to use Fibonacci, use that to get out of it, but you also use your physical eyes. So anywhere from here upward, you can have your sell limits there. Anywhere from here upward, you can have your sell limits. Now, if your sell limit is there, it means the risk as well will just be above the lower high. Risk will be above high. All right. So for a more precise entry or premium entry, we'll have our sell limit anywhere inside of this area. Put our sell limit here. Then our stop loss just be selling over here. My stop loss is above. That's the second way to enter this. Then the third way to enter this is to put a sell stop. You can also use a sell stop. So, sell stop can be used in a downtrend to target the continuation of the downtrend. Very simple. Sell stop can be used in a downtrend to target the continuation of the downtrend. So what do I mean by that? We look at this. So let's say prices going through downtrend in this manner. And you can see the pullback, new lower low. Now it's doing a pullback. So in case we're not so sure about where this pullback is going to end, sometimes it can decide to end at this previous lower low. This level here, the horizontal level of this level, and decide to end its pullback there, like where this is currently now. But there is also another way to enter strategically. If it's going to continue, then you can use sell stop, just put it at the lower low, below the lower low. So the sell stop just be here in this area, so that only if it continues down, it will pick you for sell along the way, go and give you some profit, right? So that's another way again we can position for a sell on this chart using that same setup. See it, we can position for a very fantastic sell at this level. Anytime you see a downtrend, put your sell stop at the lower low, below the lower low, right? So the sell stop will just be somewhere around here to make our entry more precise, because we want to enter at any area that we guarantee or increase the probability profit for us. So if you put a sell stop at this lower low, further increases that guarantee, because it will only pick your sell stop once the downtrend comes in. Right? So that's the plan for British pounds USD. So I'll touch on two more, and then we can now go to the commodity setup. So those of us who are already trading the um, Euro AUD, we're beginning to break it completely. And then those of us that are trading the Euro card, check our trades by now, should be getting into profit in 5 minutes. Now, JPY, there's something called JPY index. That's what we used to know trends of the Japanese. So, like I said, we trade what we see. Presently now, Euro JPY is consolidating. As we said, the plan for trading any form of consolidation, the plan for any form of consolidation is to just trade the high and the low. Just trade the highs and the lows. So this consolidation on Euro JPY is here. If you're going to buy, it has to be at the bottom consolidation. If you're going to sell, it has to be at the top of the consolidation until a breakout happens, and then you just wait for the retest. And you continue with the direction. So day trade for Euro JPY currently now is consolidating. So it's consolidating in the previous uptrend. As long as it's consolidating in between that consolidation, you just need to sell high and buy low. So that should also be the case for British pounds JPY. So that should also be the case for British pounds JPY, as it is also consolidating. And this type of consolidation is called a wide range consolidation. It's very much tradable. All we need to do is to buy at the bottom, buy at the low of the consolidation, stop loss below. You buy limits within this area, stop loss below, and take profit at the middle, or sell at the resistance, stop loss above, or sell at the resistance, stop loss above, and then take profit at the middle. That's just how to make it simple. You don't have to make it complex. The strategy does not have to be complex for it to work effectively or efficiently. It can be simple and very, very effective. So that's how I'll be approaching British pounds GBP, right? So let's go back to commodities. Let me touch on gold. Let me touch on gold for a moment. And here uh, on gold. So what has gold been doing? Of course, gold is waiting for partially the major result of the negotiations going on between Russia and Ukraine by Trump. Currently, let's trade what we see, not what we think. Forget what you think about the market. Focus on what you see. If you see a trend, then you trade a trend. You see a consolidation, then you trade a consolidation, right? So what can we see clearly on gold? So gold currently is consolidating. That's what it is doing. It's consolidating at the moment as we speak. All right. So, as I said, I've told us times without number during the course of this training that once we see a consolidation, so there is no one strategy fit all scenario on the chart. Whatever you get to the market, whatever strategy you are using, it can come in two ways. There is no single strategy that works for all the market scenarios you see every time on the chart. But each market scenario requires a different type of strategy. However, if you only have one strategy, you should only be looking out for the setup of that your one strategy on the chart. It's either you have one strategy that you are looking out for the setup on any of the charts, or you have different strategy for different scenario. So you apply the most appropriate strategy to the scenario that you are looking at. That's how to be flexible. Whichever way will give you money in this market. So currently, we are seeing a consolidation on gold. It's as simple as that. This is the high and this is the low. I'm going to streamline it, but this is like the past 1 week. I'm going to make it more broad. It's going to be here. So what are going to be my biases? There's a plan for buy. There's also a plan for sell. If I'm going to buy, what area should I look at in order for me to buy? I'm just simply going to look at the discount area. It's as simple as that. Anyway, if this is my consolidation now, let me mark half of it. So half of it is going to be here. This is half of this present consolidation. So anywhere below here is a good area to buy from. And anywhere above here is a good area to sell from. So if I'm going to choose the most appropriate one, I'll buy from here and I'll sell from it. It's as simple as that. That's how I'm going to trade the consolidation. However, if I'm looking at trend, at trading the trend, so some of us, you can see that, oh, this is looking like a downtrend. If this is looking like a downtrend, you are correct. But how then do you properly now position to enter this type of downtrend? If you're seeing a downtrend like this and you want to properly position for it, simply you just pick your sell stop and you put it below here. So you're looking out now for the breakout. You're now waiting for the breakout of that lower low or the below the consolidation for you to begin to sell from. Very simple. Make it simple. Make it as simple as possible all the time. If this is if this is your speculation that you're seeing a downtrend, oh, use a sell stop below this lower low to catch yourself. Now, what about those of us who are saying, okay, but Jeremiah, this is an uptrend because I can see this lower low went as high to create this higher high. Yes, you can also be correct. Yes, but how then do you, so all of this to you now will now become simply over. So if you are on the buy side, how then do you position to enter this type of buy? Very simple. This is how you do it. You have at least 3 ways to enter the buy if you're expecting to buy. So the first is you can come and use your buy limit here, which is the demand area, which is the demand area. And then, or you can come and put your buy stop. You can also use buy stop at this level. Also use your buy stop at the break above this level. Any of it, you are going to be correct anyways. Ever with analyzing from. So you're going to be correct. So either you're looking for a sell or for a buy, just position properly in line with what I just showed us. Then, right? So let's go ahead and also look at some indices. So start off with the US 100 and also be looking at the US 30 as well. The US 100 and the US 30. It's a very simple market to trade at the moment. So let me start off with US. US 30, clear uptrend, very fantastic uptrend. Moving very sweet, very sweet. How do you position for buy to get more clarity? One step at higher time trend, no strings attached. It's an uptrend. So we're looking for day trade opportunities. The resistance is still top yet. This is where we have resistance. So how that we see the resistance doesn't mean price will eventually fall from there. If it does not give us the criteria to see that it's changing direction, then all that we're just doing is guessing, just guessing. So let's trade what we see, not what we think. When what we see changes, we'll trade the new set of numbers. Don't think on behalf of the market. Trade what you see. You should always flow with the market. So US 30 is an uptrend. It has gotten to the resistance area of the H4 time frame. But day traders, we that we want to pick short-term opportunities in the chart and trade. What is our setup looking like? Still see this simple uptrend, see trend pullback. So this is now the new higher low. It is also the same thing as the next area where price should come probably see that we can now do new high. Price is going to do this new high, it will be there. So I plan for buy, I can plan for both in the charts. That's why at times it's always wise to have capital in your account so that you can always plan for whatever scenario comes. So my plan for buy US 30 is simple. I'll be buying at the discounted price is currently in the discounted area already. So because from here, from this level here to this level, from this higher low to this higher high, half of it is the discounted area. The price is currently in the discounted area. So if I am buying from this level here, if this is my buy limit here, it means my stop cost of inducement and take profit simply when I buy limit stop loss here, take profit. It's as simple as that. As simple as that. That's plan one. The second plan, if I am more conservative, I simply put buy stop here, then stop loss here, then take profit will be here. So that's the second plan. That'll be my second plan to speculate buy for USD, US 30. That'll be my second. Now, those of us who are thinking in line of sell for US 30, there's no clear setup for sell. But what we can see now believe that now a sell is price now begins to change level within us. This form of trade into sell. Now, simply work on what we see. Still a buy setup. Those two previous setups just gave us a how to best position for them, right? So US 100, the same thing we did on US 30, you can do the same for US 100, you can do the same for US 500, you can also do the same for US 100. Any of these pairs, you can use the same approach of them. The big difference about them, one major difference about them is that their peak values are different. Their peak values are that's just one major difference among them, but can actually use same framework for all of them, right? So for US 100 is the same. Trade what you see, not what you think. What we are seeing is an uptrend. How do you position for the uptrend? Wait for price to get into the discount level, which it has, or try to target the demand areas, which are very simple. Very simple. So, in that this area now for a good entry for a buy. So due to inducement levels, I can now use the stop and so as a skillful trader, this I would define my entry. Entry number one, this one deserves a more better risk for my US. And this, what are the second way I can also position for a buy? Because it's buying already, so there's no point trading against the trend. You can only have a plan that if it goes the other way around, how do I do it? Right now, this is what I'm seeing. Then, what is the second way to position for this buy again? Put buy stop up here and then stop loss here. Then simple. as simple as this, how we can easily position for the US 100. So like I said, everything we are doing on the US 30, we can do on the US 100. Just so as to help our technical abilities as well. Anytime we see that market is moving in an uptrend, for example, like this, and consider this is a clear uptrend. Now we know now that the most important part of that uptrend is the higher low. So this on this chart now, this should be the higher low. See, the price has not gone above this level, sorry, below this level rather. The trend hasn't changed. Now, however, on its way down to create a pullback, it is now creating a form of downtrend as its pullback. See, call it internal structure. If it's creating a form of downtrend like this, and it's using this as its pullback. All of these are just internal structure. Why? Because if price hasn't gone below the previous higher low, which is this level here, the trend hasn't changed. The higher low is the most important part of the downtrend. And then you now notice that price is using a downtrend as its pullback. In order to continue with the continuation of that trend is simple. You either come and have your buy limit at this level, that's one, or you simply put your buy stop. You can simply use the buy stop to follow the lower high of that internal structure. Any one of these two would guarantee that you are in the trend or in the trade once the uptrend resumes. Because if this price hasn't gone below this previous higher low, the trend hasn't changed. Trend is still in motion as an uptrend. And get here and then switch to an uptrend, which is very good, or in case it doesn't get to this level, let's say it gets to somewhere around here, and then from here starts to go higher. To keep you all the same. So this has very simple ways to get good entries that would increase our profitability. I'm sure that we've had nice time in this chart looking at all of those things we painted out should easily position for them, especially things like pounds USD. So I understand that this session very much recorded. You can go back to channel value trade to look at how position for this trade as we should be consistent in our approach to the market. We should actually use the same type of strategy for the same scenario all the time, the same type of strategy for the same scenario to help you get used to how to adequately that, and then you can always utilize free online training with our knowledge of analysis as well, which fundamentally and technically take advantage of the ongoing bonuses at every time to top of our accounts to leverage and make easy use of the market and just make use of everything that we have and the resources we have so as to make it small. If we had a nice time like I did taking the request of some of us in the chat box. Thank you very much for listening. I'm sure we'll be seeing you again some other time.